front of us, Andi Zahra Yuliasti is ready to have presentations, basic accounting concepts. Yes. So please pay attention to her presentation. You make questions. Yes, Andi Zahra is ready to answer any questions you like. Don't worry. Yes. One questions, you get 1 point. Okay? No questions, no point. Ladies and gentlemen, clap hand for Andi Zahra Yuliasti.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. First of all, I want to say thank you for Sir Tamrin for giving me the opportunity to do my presentation today. And also, I want to say thank you for all my audience, my friends. So my name is Andi Zahra Yuliasti, and today I'm gonna do presentation about basic accounting concepts. It's about definition, function, composition, process, and also there is glossary. First, definition of normal balance account. So normal balance account is the side of debit or credit where an account's increase is recorded indicates the expected balance of the account type. Next, definition of general journal. So general journal is the first official record of a financial transaction. It's a chronological record showing the date of the transaction, the accounts affected, and the debit and credit amounts. Next, definition of general ledger. So general ledger is a collection of all the accounts used by a company. It summarizes the change, debit and credit, and the current balance for each individual account, like cash, accounts payable, and sales revenue. Next, definition of debit and credit. So, debit in accounting refers to the left side of a T account and an entry in the general journal. It increases asset, expense, and dividend accounts and decreases liability, equity, and revenue accounts. And credit in accounting refers to the right side of a T account and entry in the general journal. It increases liability, equity, and revenue accounts and decreases assets, expense, and dividend accounts. Next, the composition of debit and credit. First, debit. The left side of any T account. It increases assets, expenses, and dividends account and decreases liability, equity, and revenue accounts. And credit in the right side of any T account. It increases liabilities, equity, revenue accounts, and decreases assets, expenses, and dividends accounts. Next, the composition of normal balance account. So, the concept of normal balance account is divided by 5 main types of accounts, which are categorized based on the fundamental accounting equation. Assets is liabilities plus equity. So, as you can see, that all the composition of a normal balance account is asset, normal balance side in credit, and also for expense and in debit, and then for liabilities, revenue, and equity, normal balance side are on credit. Next, the composition of general journal. The general journal is the book of original entry. Each entry is a single unit that must contain four main parts to be complete and valid. So that is the composition of general journal. There is date, is the specific date the transaction occurred. Answering the record is chronological, and there is account titles and explanation is the name of the accounts being affected, one or more debits, one or more credits, and a brief description of the transaction. And there is posting reference or PR is a column used to track the transfer of the entry to the general ledger, cross-referencing. And last, debit and credit columns is the respective columns where the monetary amounts are recorded. The total in the debit column must equal to the total in credit column for every single entry. Next, the composition of general ledger. The general ledger is a master set of individual accounts which are often structured as a T account or in a more formal column format. The main sections are defined by the account's content. So that's the composition of general ledger. There is chart of accounts, is complete list of all accounts and company uses, typically organized by accounts number, like assets typing in. And the next, individual account heading is each page or digital screen is dedicated to a single account, like cash account and account payable. And next, there is debt and item column. Is used to track the history and search of the entry transferred posted from the journal. And then debit and credit columns. It records the amounts of activity or posting transferred from the journal. And the last, balance column tracks the running total to the current balance of the account after each entry is posted, indicating the account's final value at any point in time. Next, analyze and apply the rules using debit, credit, and normal balance. So, the first step when a transaction occurs is to determine its effect on the account equation. Its assets, its liability plus equity. So, first, you should identify accounts. Determine at least two accounts affected by the transaction, cash and service revenue. And then second, determine change. Decide if each account is increasing or decreasing. And then third, apply normal balance. Use the normal balance rule to translate the change into a debit or a credit. Next, record the entry using the general journal. Once you have determined the debit and credits, the transaction is formally recorded in the general journal in process called journalizing. So first, chronology. The transaction is recorded immediately, ensuring all the entries are in strict date order. And second, the journal entry. A formal entry is created using the general journal structure, like the date, the account, and also the account of debit and credit. And for third, proof of balance. By completing the journal entry, you formally prove that the total debits equal to the total credits, maintaining the foundational balance of the entire accounting system. Next, summarize the data using the general ledger. Okay, so once you have determined the debit and credit, the transaction is formally recorded in the general journal in a process called journalizing. So it's just the same. There is chronology and also the journal entry, like the debt account, like in credit and debit, and also visual proof of balance. Next, glossary. For debit, to increase assets and expenses, the left side of any account used to increase account with a normal debit balance and decrease account with a normal credit balance. Next, credit increases liabilities and revenue. The right side of any account used to increases accounts with a normal credit balance and decrease account in a normal debit balance. Normal balance is the rule book, the expected side of debit or credit, where an account increase is recorded. It acts as the fundamental guide for applying debit and credit rules consistently. Next, general journal is the chronological record. The first book of entry where transactions are analyzed and recorded by date. It must prove that total debit equal total credit for every entry. Next, journal entry is the transaction unit, the formal balance recording of a single transaction within the general journal, detailing the debt, account, and monetary amounts. Next, general ledger, the summary organizer, the complete set of individual accounts like cash, rent, expense. It classifies and summarizes all journal activity to provide the current final balance for each account. And then posting, or the transfer process. The act is copying the debit and credit amounts from the general journal to the respective individual accounts in the general ledger. And then double entry accounting, that the system foundation, the fundamental system where every financial transaction affects at least two accounts, guaranteeing that the accounting equation remains in perfect balance. Okay, that's all my presentation. If you guys have any question for me, I will answer your question. So, any question, guys? Okay.
Thank you for the opportunity that you have given me. My name is Andi Zahra Yuliasti, and I would like to ask you about, could you please give me the definition about general journal in your opinion? Thank you very much. That's it.
Thank you for the question. So, let me show you. So, this is the definition of general journal. So, general journal is the first official record of financial transaction. It's a chronological record showing the date of the transaction, the accounts affected, and the debit and credit amounts. Yeah, that's all. What do you think?
Why do we have to do with chronological of general journal?
Can you repeat your question?
Why we have to record with chronological of general journal?
Okay. So, I think every transaction we should make like a journal. That's why we should record all the transaction in general journal. So when there's like a problem when you do transactions, you should record it on the general journal. Maybe that's all for my answer.
Can we use other journal? Can we use other journal than general journal?
Yeah, there is. I think there is any journal, not just general journal like this. There is also general ledger. We use that when we record our transaction.
General journal. Can you show me?
General journal?
Ledger.
Maybe I can't show you the journal because I didn't enter it on my presentation, but there is a composition. So maybe it looks like this, but this ball is the head of the table, and this there is in the yeah.
I thought general ledger are used to posting, not recording. But how do you think?
Yeah, I think you're right. I'm sorry if maybe, yeah, I don't know, maybe it's my mistake.
And last one.
Okay,
Can we posting without general journal?
I think no, because, you know, in accounting cycle, there is some process, and you should do the process one by one, so you can skip if you didn't do one step. It will be wrong, I think. Okay, so what do you think about my answer?
Alright, thank you for your answer. And I appreciate it.
Okay, thank you very much. Next question, please. Okay, Amanda Ramayana. What's your question?
Okay, my name is Amanda Menti. I wanna ask you why is the balance sheet important in accounting?
Do you mean normal balance?
Why is the balance sheet important in accounting?
So, wait a minute, I will show you. So as you can see, normal balance account is the side of debit and credit where an account and credit is recorded. It indicates the expected balance of the account type. So, it helps prevent recording errors and ensures each transaction follows consistent rules for debit and credit.
Yes, I see.
Okay, thank you. Next question, please.
Ya, pertanyaan lain.
Okay, Snaini, do you have any question for me? Okay, thank you. What's your question?
What is the purpose of the general ledger?
Okay. So you can final balance for financial statements. Yeah, I think that's all. What do you think about my answer? Do you agree with that? Yes. Okay, thank you.
Sudah berapa? How many times? Terima kasih.
4. Okay. So, any question? Okay. Nur Arya. Please, what's your question?
My question is, what are the main part of a journal entry? What are the main part of a journal entry? Thank you.
Okay. So, as you can see here, there is like record the entry by using the general journal. I think the main part of general journal is that and the account debit and also the account credit. That's all. You're welcome. Any questions? Okay, Bill number, what's your question?
My question is, what is a debit into asset account?
Okay, so a debit increases assets account. That all debit due to asset account. Oh, not this. I just wait. Yeah. Here you can see it for. Oh, I'm sorry. So, yeah. In accounting, debit refers to the left side of the account and entry in the general journal. It's for increases asset, expense, and dividend account, and decrease liability, equity, and revenue accounts. What do you think? Do you agree?
Yes.
Okay, thank you.
Sir, sudah selesai.
Anda Amalia.
Andi Zahra namanya, Sir.
Siapa?
Andi Zahra.
Oh iya. Coba tampilkan dengan judul. Basic accounting concept. What is basic accounting concept?
I think it's like the main composition of accounting. When you do transaction, there is like this basic accounting concept for make journal.
Can you show example?
For example, there is normal balance account and also general journal and general ledger and the last debit and credit.
Debit and credit. What is debit?
So debit is like increases asset expense in journal and is dividend account and decreases liability, equity and revenue accounts.
What is the difference between debit and credit?
Is I can show you in here. Here. So like the normal balance side for asset and expense, it's debit. It means like it increase for assets and expense, and it's different for liabilities and revenue. Because normal balance side is in credit. Yeah, that's all.
Can you show example of asset?
It's like a car and then a building.
Assets, liabilities, yes, and equity. If I have, if I buy a table, yes, is that a kind of assets?
Yeah, it can be, but I think it will be,
Asset?
yeah,
No,
it can be in asset. I
Assets,
think,
no.
yeah, no, it can,
why?
because tables,
Table, I buy this table. Is
because
that a asset?
it means like when I buy this table is mine, so it's my asset.
Okay, another example. I am the owner of a company. For example, this building. This is my building to run my business. Is this building an asset?
Yeah.
Huh?
Yes.
Asset. Asset. Siapa bilang gedung bukan aset? Bukan. Kenapa bukan? Why don't you say asset? It is not asset.
No, I said yes, sir. I said yes.
Okay. Can you explain a little bit the difference? Decreases equity and increases equity. Can you give an example? Explain. How do you explain? Decreases equity, increases equity. How do you explain?
It's like I'm sorry, sir. I think I can answer your question. I didn't have to say it.
Give example, increases equity and decreases. You know, increase, 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 increase. Give example. Do you think this is a difficult question?
I don't know how to say it.
If it is difficult question, you can say, sorry, difficult question, sir. Can you explain?
Sorry, sir, I will explain.
You can explain.
Yes, because it's hard to say.
I'm asking you, how do you explain? You give example, increases equity, decreases equity. You see the example there? Can you show? Diperlihatkan tadi. Nah, here. Account tied, no balance. How it affects equity? Yes, expenses, debit, decreases equity. Revenue, credit, increases equity. Can you explain? Who can explain? Who? Come on. Okay, Nafisa, please.
About the decrease of the of equity, sir, and the decrease.
Yeah, you see there, in expenses, debit, as decreases equity. Give example, when,
When
yeah, decreases equity
the
happen.
The decreases of equity, it can be happen when we have profit. Like we, in our closing journal, we will journal in profit is on debit and equity is in credit. So in that way, we can see the equity got increased. And about the decrease of equity, it can be happen when we prefer our drawing, or we pay the dividend for our investor. So the dividend or prefer is on debit. I mean, the equity is on debit, and the price or credit and the when we close our equity and our dividend, we can see equity got closed in debit side with amount of our preferred on price drawing, or our dividend that we pay our investor.
Yeah. So there is a difference there, yeah? Expenses, debit, decreases equity. Revenue, credit, increases equity. Okay, thank you. You can close your presentations.